Very good afternoon to you. Thank you for staying with this broadcast. My name is Kewe Akindola, and of course, this is another edition of Tax Ecosystem, brought to you live from Insights Radio, your number one finance online radio station. I've got with me today I won't call him my guest anymore, he's my co-host, Mr. OLATUJI.
Good afternoon. My name is OLATUJI ABDULRAZAQ.
Yeah, thank you for being here again today, even in the rain.
Thank you.
Yeah, so today with Mr. OLATUJI, we're going to be talking, more about tax. And today we're looking at keeping the right records, for tax purposes. Last week we talked about tax extensively, and this week we're going to be talking about keeping the right books, for tax purposes. So tell us, how important is it to keep the right books for tax?
It's very important.
Okay.
So by keeping proper records, it will help you, reduce your tax exposures.
Your tax exposure.
Yeah.
Okay. When you keep the right books, it reduces you, from tax exposure.
Exactly, because keeping the proper records, your transactions are well filed, at least for the for a minimum of 6 years.
For a minimum.
Because when tax officials come around, either LRS or FRS for audit,
okay,
you should be able to provide some supporting documents,
to back up what you've been doing.
Exactly, what you've been
doing.
Yes. And it's not just keeping the record, you also need to pay the right taxes.
You also need to pay the right taxes.
Yes.
Okay. So before we came on the show, you said something about it's going to be June, before the end of the month of June.
Okay. I'm talking about companies whose financial year ends at 31st December.
Okay.
They have up to 30th June to file their returns, their company income tax.
Okay.
So what the law says is that you have 6 months after your financial year end to file your tax returns, your company income tax returns.
You have 6 months after your financial year end.
Yes, and most companies in Nigeria, their financial year ends at 31st December.
Okay.
So they have, that 6 months after 31st December.
Should be the end of June.
Yes, should be the end of June.
Because I was just going to ask that, why should it be the end of June? So what about those people whose financial year is not, is not now?
Yes, they should just count 6 months after.
Okay.
If it is 31st March, then probably you'll be looking at around September or thereabout.
Okay.
Yes.
So it's the company themselves that would have to take up this responsibility. It's not the tax officials who will be coming.
Yes, we operate a self-assessment system where you assess yourself and then pay the right taxes. However, any of the relevant tax authority, can come to do a tax review or a tax audit
at any time.
Yes, at any time, just to be sure you've actually done the right thing. Yes.
Okay. So this 6 months thing you're talking about now is the responsibility of the company to do this on their own.
Yes.
When it is 6 months. So regardless of if it's June, no matter what the time is, 6 months after your financial year,
you have to file with the FRS. Yes.
With the FRS. So what are these important documents that we're talking about here? Because you're saying keeping the right records. There's so many records.
Yeah,
what is the right record?
Okay, let me start by saying that when you have to start any transaction, you have a contract.
Okay.
You need to keep a copy of those contracts.
Okay.
The contract is spelled out the detailed agreements with you and your client.
Okay.
Then apart from the contract, aside the contract, you have invoices. You raise an invoice.
Okay.
These invoices, the terms of payment and everything is stated on the invoice.
Stated on the invoice.
Yes, even the VAT that you are meant to pay, which is 5% of VAT, if the goods or service is subject to VAT.
Okay.
Yes, you need to also
keep the record for that.
You keep the record for that, and
your profit, your cash book, and all of that.
Everything you need to put your books in
order.
Yes.
Okay. So who keeps this? So because you said something about having chartered accountants come to do that.
Well, that is at the point of preparing an audited financial statement. Even though the audited financial statement is the responsibility of the directors of the company, you still need a qualified accountant, to sign
off on that
account.
Okay, so does it mean that at the end of the financial year, at the 6 month end you were talking about, you need these people to come in and do that for you?
Yes, once it's 31st December for most companies, maybe 1 month or 2 months, that's between January and February, the auditor should have started, doing the necessary audit work just to be sure that the financials, the financial statement shows the true and fair picture of what has happened over the year.
Okay, so tell me, who are the companies that need to have this company income tax ready?
Well, of course, mainly all limited liability companies.
So once your company is a limited liability company, you should be preparing your company's income tax for every, half of the year. Okay, so that being said, what are the implications of not doing this?
Well, there are penalties. If you don't keep up a record, there are penalties, and this could also, expose you to more taxes if you don't have documents. For example, if there is an audit by FRS and they discover that you have maybe let's say, let me give an example, like 100 transactions in a year, which sum up to, let's say, 100 million.
Wow.
And probably you don't have proper records to show that, this was invoiced, these are my expenses, and all that. You need to be able to differentiate what your income is, what your expenses. If you have any loan, of course, it should be written,
it should be stated
exactly,
there as well.
That these are loans and all that, so that even when they come for audit, it should be very clear to them that, these are not an income, this is as a result of loan, these are the expenses incurred, and there are some transactions that are also VAT exempted. If you have that, let it be stated on the contract that this is the nature of your business and all that. So you need to spell a lot of things out so that it can reduce your tax exposure should they come for audit.
Okay, so what about a company now who probably I have a limited liability company, I'm not aware that I have to do this kind of thing. So what then happens if my books are incomplete and they come? So what happens next?
Well, most of the time when they come and your books are incomplete, they could give you what we call best of judgment. Best of judgment. They just look at it and say, based on the size of this company, they just give you one. You could go and pay this amount of money.
Okay, they just give you a particular amount.
Yes, but that might be too huge for you. So it's better. That's why we always advise companies to
always put their books that ensure that you have all your
exactly on your documentation in place, because tax is all about what is in the law and the documents to support it. For example, if you enter into a contract and probably you are being reimbursed for something, of course reimbursables are not vatable. So but you need to provide evidence to show
that is a reimbursement.
Exactly. So these are the things you need to show them so that they don't just slam tax on all the transactions. Okay. Yes.
So I want to believe that for people who have not been doing this or are currently doing this, there should be some advantages or benefits to them as a company. So if you keep proper record of your books before these tax officials actually come to audit at any time, what are the advantages or benefits to the company, to the business?
Okay, let me give you a particular scenario. Let's say company A, say company ABC.
Yeah.
I've been doing transaction with another company, and eventually they were not paid. So that particular transaction got bad. When I mean bad, it turns to a bad debt.
A bad debt, okay.
Now, normally for tax purposes, there are some expenses that are not allowed. Like bad debt, if you don't have good supporting documents to prove that you actually had a bad debt.
Okay.
Even it's under the law, though I can't remember the section now.
Okay.
Where it says that you should be able to convince the tax official satisfactorily, for them to allow
that debt,
bad debt. So and what are the kind of evidence they're looking at? Probably you've taken the client to court.
Okay.
Those are third party evidence, or probably you've reported to the police to say, look, I've done business with this person, he has refused to pay me, and of course there's been
documentation for those things.
Exactly.
Wow.
So this kind of thing, they will allow it, and it will be exempted from.
So those are some of the benefits.
So yeah, it will be one of the allowable deductions for you. But if you don't have such document, it will be added back, and it will increase your profit, and which will be subject to tax.
So this bookkeeping thing is so key
in
for
fact,
any business.
Honestly speaking, I call it the starting point of any tax planning.
Wow.
You need to have your documents intact.
You need to have all your documents
intact.
Yes. Make sure you keep, records of everything that's coming, go out and all of that. Okay, so you guys, you've heard it all. We'll go on a quick break, and when we come back, we proceed with the show. It is still Tax Ecosystem right here on Insights Radio, your number one online finance radio station. Don't go anywhere too far. Stay close to your radio.
Everything business, everything finance, all on one dedicated radio station, Insights Radio.
Welcome back. It is still Tax Ecosystem right here on Insights Radio, and we are talking about keeping the right records, keeping the right books, for companies. For when the tax officials come to check, you need to keep the right records and documents. And I have with me in the studio, as always, Tunji ABDULRAZAQ is here, and he is the tax expert on the show, analyzing and dissecting everything that has to do.
Thank you very much.
Okay. So now, after before we went on the break, we were talking about the right records. Now you have kept the right books, you have kept the right records. What should you be looking out for when the tax officials come for this tax audit? And what are the things?
Okay, like I said earlier, we operate a self-assessment system where you are expected to file your returns as at when due, and maybe once in a while, or the tax officials or the relevant tax authority would come for a tax review or for a tax audit. Now, one of the things you need to look out for is that you'll be sent a letter, informing you that they'll be coming for tax audits on a particular date.
Okay, so that's due process.
Exactly, that's the due process. They need to send you a letter. On that letter, you also have the list of documents you're expected to put together. Now, where you have issues, maybe let's say for example, they sent you a letter 3 weeks that in 3 weeks time we'll be coming for an audit, and you are not prepared. Of course, you have the right to write back to them for extension. Pending when you get all those documentations ready and all that. And secondly, when they come to your premises, of course you could also ask them to show them your ID card so that you can identify them to be sure real. Yes, as
that they're authentic,
they're proper,
and not
exactly. Then thirdly, you provide all your documents, bring out all your vouchers, invoices, your audited financial statements, all the relevant documents that they will need. And they might be around for an average of 1 or 2 weeks, depending on the volume of your
Yes. I thought this thing was just 1 day.
No. Of course, they might be around for one. What if they are coming for an average of maybe a period covered of 3 years or 4 years?
So something must be.
Yes, because they can come. FRS can audit you for 6 years. So that's why we advise clients to keep at least a minimum of 6 years to keep their documentation proper. Yes. So that's just it. Then the next level after that is after the audit has been concluded, they also send you a report. Their audit report showing what you've not done properly. That means your potential tax liability, what you are expected to pay. Yes, or additional tax liability if there is any. Now you have 30 days to object to it. If for example they come with an additional assessment of let's say 30 million and you feel I've been doing the right thing, you can write a letter, object to it and say, look, no, you've done the right thing, and then you also state the basis of your objection. Exactly. You need to highlight it. If it is, if your additional assessment comes from VAT, you need to provide evidence to show that, look, I've remitted this, either by sending the e-receipt that you have paid. Because once you remit like that, you get an e-receipt.
But
that's evidence of payment.
So, but in this scenario you're talking about, you don't need to have a lawyer.
No. Well,
for example, if you're in disagreement with what they have said.
No. You don't. I think the last resort should be going to court. You don't need a lawyer. You just need a tax expert to engage them, provide the necessary documents, to support your assertion. Whatever you're talking about. So that's why you need a tax expert. It's not everything you take to court.
So you just need a tax expert.
Yes, you need a tax expert, to come review those documents, review their own basis, because they would have also come with a basis to say, okay, look, we didn't see this, we didn't see that. This is what we are doing. And then exactly. So you need to provide documentation that yes, I've done this. I've done that.
Now let's talk about. Now we just spoke about documentation on the part of the company. Let's talk about documentation on the part of the officials on their own. Now, peradventure, something happens. Probably ABC had a company they've been paying and doing their whole tax matters, and maybe unfortunately something went wrong, and now they cannot. Just like saying somebody finished school and maybe they were robbed and their NY certificate and whatever is lost. And most times when you go back, there's a long process to get that document back. And I mean, I passed through this system. So what is the bookkeeping or recording system of documents like for the officials? Or do we need to have an official of the
No. Well, the truth about it is that, normally when you go to file your returns on a monthly basis, let me take, for example, VAT, for example.
Okay.
Whatever you are filing, you should have an acknowledged copy. But the truth about it is that in practice, most of the time, you know what the public sector is.
Yes,
you can't expect FIRS. How many companies do they want to keep their records? Though you should keep your own filing this thing safe, even if you have to have a cloud system where you scan and yes, it's advisable you do that, because the onus is still on the taxpayer to prove otherwise. That look, I'm not owing this much.
So are you trying to say now that if peradventure I don't have any cloud whatever, so that means everything I've paid is...
Let me give you an example. There's one of my clients that had such issues. I think theirs was flood or something, and they had one or two. What we actually did was to ask for more time. We requested for more time we wrote a letter to the Revenue Authority saying that, look, this is what happened. There are some documents that we're unable to retrieve, and we will need to talk to some of the clients to see if we can retrieve them from the third party. Of course, if you have you have sent an invoice to somebody in dealing, they will have a copy. So we started contacting. So you just need to be very careful with respect to keeping proper documentation. Yes. Of your transactions. So it's very, very important, because if you don't have documentation, how do you say, okay, I've paid this much? If, for example, you've been assessed 30 million and you're saying, no, I'm supposed to pay 25 million. Okay, even the 25 million we are talking about, can you provide an evidence that you've actually remitted it? That this has been remitted. So you need to show maybe your e-receipt
or something to show that.
But now I think there's something that that FIRS does now. There's a portal where every taxpayer, you can log on to this portal, download your withholding tax credit note and all your payments that you have done. Yes, there's an FIRS
so that's
portal now.
A better way of keeping.
Well, but that is just the receipt. Not they're not going to be uploading your invoices for you. So that's just receipt that, okay, yes, you've paid this much. So I think we also need to give kudos to FIRS. Although there's still room for improvement.
There's still room for, but they're doing a good job now, trying to ensure that everybody is at least.
Yes.
Okay.
So so that's basically it. And one of the things I also want to mention is that one of the advantages of keeping proper record is that, for example, should you need a tax clearance certificate, most government agencies, is one of the requirements that if you want to get any contract or you want to bid for any job in some of these bigger companies or even agencies, government agencies especially, one of the requirements is tax clearance certificate. So how do you even apply or even process your tax clearance certificate if you can't show evidence that you have remitted this, you have remitted that? On what basis are you applying? So these are the advantages of keeping proper records
and paying your tax.
Yes, exactly.
Okay.
So
that's what it's about.
Exactly. So tax clearance certificate is actually very, very important if you want to be in business, especially in government establishment and all that. It is very, very important you get that.
For you to have a tax clearance certificate.
Yes.
So have you had any scenarios of maybe your clients who have maybe not had their tax clearance certificate and they had to, the tax people had come for them, and so how did you resolve this?
Basically, like I said earlier, it's important to keep proper records. If you don't have it, you might need to start writing to those who you've had one or two businesses with to get those documentation. Now, once you apply for tax clearance, let me just tell you about the processes. Once you apply, now you have to log on with your login details on the FIRS portal, and then you send your application. Now, I won't send your application, they receive a notification right from there. They review your file, because every taxpayer has a file with
Okay.
The Federal Inland Revenue Service. Every company has a file. So they will review it, check your payment history. You know, if it is satisfactory, if it is they look at your transaction, your turnover. You know, compare it to the taxes that you have remitted. And well, if they are not satisfied, you know, haven't reviewed it, they can write a letter to you telling you the basis of rejection. You know, you've applied
for a tax clearance now,
and
but
now
they can't give it
exactly
to you.
they you know, they sent you a mail or you know, a letter saying that we've rejected your application because of this and this. Now they could state 2 reasons or 3 reasons and say, okay, we rejected your application because you've not remitted your VAT completely. 1, 2, because probably you filed late. You filed late, or 3, because you have not even filed at all. Now it is the taxpayer that will now respond saying that, okay, for so and so period, there's a late filing, so you are required to go and pay the late penalty. Once you pay the late filing penalty, and then you're able to pay, if you've done your own assessment and you see that, okay, you've not paid complete,
not done some things right.
So you need to go and do it, pay the penalty on it. Then once you pay the penalty on it, you now respond to that rejection letter.
But let me just cut you short there. You said something about late payment.
Late.
So is there a time frame to pay?
Of course, like the timing for every taxes.
For tax clearance? No,
not tax clearance. For taxes, like VAT, for example.
So you're talking about the kind of tax itself when you pay for that. Just like you said, there are some 31 days you should pay. There are before the 3rd of 10th, 11th of the next all
month,
those things.
21st, yes.
Okay, so if you miss that payment, that's the part you're talking about. I thought you meant when you want to get your tax clearance, there's a time frame where you should apply for it.
No.
Okay, that's any time.
You can apply. Yes, once you can. Well, not necessarily any time. For example, if you have done all your filing, you can even start from the beginning of the year, as a guest last year. So, you'll be assessed based on last year's record.
On last year's record.
Yes.
So it's a previous thing, what has happened.
Exactly.
Okay.
But the tax clearance usually is valid till 31st December of any current year. So if, for example, if you're applying for tax clearance now, let's say today, you'll be issued one that will expire 31st December 2019.
Wow, so it's just for 1 year. So you can't do for months.
No.
For a short period of time.
It's for 1 year. But even if you get it November, the date of the expiry date will still be 31st
of December.
Yes,
so it's a 1 year.
Yes.
So it's better to do the clearance thing at the beginning.
Yeah, you can apply. You can apply early so that at least if there's any issue in terms of rejection, you have time to respond and then do the needful. Okay, understandably enough. Okay, should we go on another break? Okay, guys, we'll go on a quick break and then we'll be back. It is still Insights Radio, and I have OLATUJI ABDULRAZAQ with me in the studio, our tax expert of life. Thank you very much.
All right, guys, don't go anywhere too far. Please stay close to your radio.
You are listening to Nigeria's first finance radio station, Insights Radio.
Welcome to Insights Radio. This is Insights Radio.
Tax ecosystem is still live on Insights Radio. Thank you for staying with us. Thank you for joining the broadcast. We are talking about keeping the right documents for your business to avoid being, paying the
to avoid tax exposure.
Tax exposure, yes. To avoid that. That's the word. To avoid tax exposure. Okay, so now we've talked about the advantages. Okay, first we started with keeping the right records, why you should keep the right records. We've talked about the advantages of keeping the right records. Now let's look at the disadvantages of not keeping the right books for your business.
Okay, we'll be looking at it from two sides. We'll be looking at it from the tax official side, with the tax authority, and we'll be looking at it with even your own clients.
Okay.
Now, let me go first with your clients. For example, we talked about bad debt earlier.
Okay.
Of course, if you want to recover your debts, you need to provide evidence to the police or in court if you want to recover it. That okay, yes, this was a transaction. These are the evidence that I delivered the goods and all that. So that's on the client side. For the tax aspect of it, because for you to reduce your tax exposure, you need to keep the proper documentation to show that okay, look, these are my expenses. These are if there's any reimbursement on it, you can say okay, this is reimbursable. It's not subject to VAT and all that. So the starting point, like I said, is putting the right document, because if you don't have the right document, how do you even start talking or engaging the tax official?
How can you defend yourself?
Yes.
It's like an evidence.
Exactly. So these are the disadvantages. You don't have any documentation to show that
you carried out any kind of transaction and stuff.
Exactly. So these are the problem. And
it can be cost effective for the business.
Of course.
Because something where you shouldn't have paid so much.
Exactly.
You end up
because even if you don't keep proper records, it's possible you have even paid a client twice.
Wow.
Or it's even possible that a tax payment that you have done earlier, you are repeating it again. So these are the reasons why those
to avoid those kind of little mistakes.
Exactly.
You have to ensure that you're keeping
proper documentation.
Or else
and this documentation should be kept for a minimum of 6 years.
For a minimum of 6 years.
Yes.
Okay, so for a new business, you can just have what you have.
Exactly.
Just start by keeping them. So even if it's just the first 6 months.
Exactly. Just have it.
But for businesses that have stayed longer than that, at least go as way back as
6 years.
6 years. Wow. So that's so key to have all these documents. So
it's very, very important.
Very, very important. Is there anything else aside that?
Well, like I used to advise my people out there, please ensure you keep proper records, pay your taxes as at when due to avoid any tax exposure. Pay your taxes as at when due to avoid tax exposure. So please, if you know you're not keeping the right records for your business, start today. Record keeping is important, not even just because of tax. Fine, we're saying it now because it's the purpose of, we're talking about tax ecosystem. That's what the show is about. But generally, you should be keeping records. That's why, as old as you are, you still have your NYSC certificate, your masters and all that, because it might come into play. Exactly. So record keeping is so key. So for the purpose of your business, keep good records of what comes in, what goes out, so you're not exposed, and always have the auditors come in, right? Like you said, to come and check your books and sign off on it that this is what this is and that is what. Because it's one of the requirements for you to file your company income tax. So
so you see it's one of the requirements.
Yes.
So let the auditors come in and sign off on the books.
Account,
Okay. So thank you for staying with us. We'll have the show every Wednesday by 12. Oh, I said
every
Wednesday.
Tuesday.
Don't mind Miss Doreen. We have this show every Tuesday from 12 p.m. to 12:30 p.m. and we'll always have OLATUJI ABDULRAZAQ. Very soon he'll be bringing his gang.
Yes.
So they do this together. So thank you for being on the show. Thank you for joining this broadcast. We do this every Tuesday. Join us same time next week. My name is Kewe and he is
OLATUJI ABDULRAZAQ.
Have a great afternoon. Bye bye.
Thank you.